Welcome to Inside India. I'm JP Ong, and here are your headlines. The Nifty is looking to reclaim that 26,000 level after giving up gains last week, which also put an end to a 4-week winning streak. Indian fintech firm Pine Labs more than halves the size of its planned IPO as it prepares to open its books to investors this week. And oil prices are turning higher after OPEC Plus said it would pause output hikes amidst December's supply glut. Good morning, and at the start of the new trading week, we take another look at how Asian markets are shaping up so far, and it's looking mixed to the upside for the most part. Keep in mind, Japanese markets are offline because of what is called Culture Day out in Tokyo, but overall it's looking quite positive, especially for the likes of the Kospi in South Korea, surging more than 2.5% up in the green. And while the Hang Seng is holding on to gains of about 0.5% in their early morning intraday trade, we're seeing the Shanghai Composite looking a bit sluggish today. They're in the red, but only by so much, down by just about 0.1%. Now, the U.S. and China are taking steps to ease military tensions. U.S. Defense Secretary Pete Hegseth says the two superpowers have agreed to establish direct communication between their militaries, hoping to de-conflict and de-escalate problems that could crop up. This comes shortly after President Donald Trump's meeting with China's Xi Jinping in South Korea. Hegseth described his own talks with Chinese Defense Minister Admiral Dong Jun in Malaysia as equally positive, with more discussions expected as Washington and Beijing work to formalize these new communication lines. And the U.S. has also signed a defense agreement with India. The 10-year defense framework agreement aims to strengthen military cooperation between the two countries. U.S. Defense Secretary Pete Hegseth announced the deal after meeting India's Defense Minister Rajnath Singh on the sidelines of the ASEAN Defense Ministers meeting in Kuala Lumpur. It was the first meeting between the two since Washington imposed 50% tariffs on Indian goods in August over New Delhi's Russian oil purchases, a move that led India to pause its U.S. defense buys. Both sides are now expected to review India's planned military equipment purchases. And here's what Hegseth and Singh had to say after signing the deal.
This new 10-year defense framework, which we signed, is ambitious. It's a significant step for our two militaries, a roadmap for deeper and even more meaningful collaboration ahead. It underscores America's long-term commitment to our shared security and our strong partnership between our countries. We have a major defense partnership that is ongoing and made even more powerful by this agreement.
We are signing the defense framework for 10 years, which I'm sure will open new doors for our defense relationship. Thank you so much, and also under your leadership, we will be able to do more bilaterally on the defense sector.
And at the ASEAN Defense Ministers meeting, plus in KL, Rajnath Singh also underlined New Delhi's commitment to a free, open, and rules-based Indo-Pacific. Singh said India's approach remains open, inclusive, and anchored in international law. He stressed that India's focus on the UN Convention on the Law of the Sea and its support for freedom of navigation and overflight is not directed against any country, but aimed at safeguarding the collective interests of all regional stakeholders. And we're also watching out for the Indian markets, which are set to come online in about 42 minutes. And here's what Gift Nifty futures are indicating, a quick snapshot at least before, or the first snapshot before that market opens. And we're seeing that it is trading in the green and foreshadowing that perhaps we're in for a pretty decent start, up by about 120 points above the Nifty's close last Friday. Now, mind you, the Nifty is coming off a 2-day losing streak, but again, no bother because it looked quite good for the most part last month, up about 4.5% over the month of October, and did at one point threaten 26,000. It is going to try to make a fresh assault on that new level, but so far sitting comfortable at 25,722. The Indian rupee, though, a little bit softer today at 88.76 against the U.S. dollar. Over 400 Nifty companies are also reporting this week, which means we might get a lot of data and also a lot of indicators that might shape market sentiment on a rolling basis as the week progresses. Fintech firm Pine Labs is also opening its public offer for the subscriptions this Friday. And ahead of that, the company has set a price band of 210 to 221 rupees per share for its reduced IPO. It's now seeking a valuation of about $2.9 billion. It's also trimmed the offer size, cutting the stake sold by existing investors by 44% and also reducing the new shares issued by 20%. The IPO, opening from November 7 to 11, will now issue new shares worth 20.8 billion Indian rupees, down from the earlier target of about 26 billion. Existing investors include Peak 15 Partners, PayPal, and MasterCard, selling a total of 82.3 million shares. That's compared to the 147.8 million shares that was originally planned back in June. So we mentioned a busy week for India's market with offerings from stockbroking platform Grow and consumer wearable firms Boat also set to open. Meantime, Lenskart has already started attracting retail bids. India is also stepping up its bid to break China's dominance in rare earths. Bloomberg reports, citing sources, that the government is planning to almost triple incentives for rare earth magnet manufacturing to over $788 million. This push aims to rapidly build domestic capacity in a sector critical for electric vehicles, defense systems, and high-tech manufacturing, areas where China still controls most of the global supply. The expanded incentives are expected to draw in private investment and strengthen India's position in the strategic critical mineral supply chain. But the proposal is still awaiting approval, and the final amount could change. This comes just as China resumes rare earth magnet supplies to India after a 6-month halt. And as the U.S. says Beijing will suspend extra export curbs on rare earth metals and end probes into American chipmakers. Tech has been the other big issue looming over U.S.-China trade ties. Presidents Trump and Xi did not talk about sales of NVIDIA's most advanced GPU, Blackwell. NVIDIA's CEO Jensen Huang maintains that he would still like the Blackwell chip to be sold in China, as the company's market share in China dwindles to zero. But Trump is telling the press, or told the press a couple of hours ago, that Blackwell remains off the table and that, quote, it's not for other people. But NVIDIA's most advanced chips will be used by South Korea. NVIDIA will be selling 260,000 of its most cutting-edge chips to some of Korea's largest companies, including Samsung Electronics, SK Hynix, and Hyundai Motor. CNBC's Sherry Kang was in South Korea and grabbed a second with Jensen Huang to ask him about these latest moves.
Talk to us about the foundry cooperation with Samsung Electronics. Are you, in a way, hedging TSMC?
No, hedging isn't really the right way to think about it.
How would you describe it?
We have partners that excel at the areas of manufacturing semiconductors. It is not, as you know, I make chips. There are many companies that make chips, and we make chips in different ways for different reasons and different value propositions, if you will. And so it's the same with Samsung, and you know they're deep and excellent in their field of semiconductors. And whenever we have opportunities where our products are perfect fit for the way that they manufacture chips, we find opportunities to work together. Today, Samsung manufactures all of NVIDIA's robotics processors.
And more news and updates coming up, including a deep dive into India's aviation sector as Air India seeks a cash infusion from its owners. Stay tuned. You're watching Air Inside India. Welcome back to Inside India and some latest developments from Air India. The airline has grounded 2 pilots after discovering licensing violations. This is according to the Times of India, with 1 pilot flying with an expired English proficiency certificate and another without completing mandatory retraining. India's aviation regulator has launched a formal investigation and sought for a detailed report. Meanwhile, Air India is reportedly seeking at least $1.1 billion in fresh funding from owners Tata Sons and Singapore Airlines. It comes after the deadly Air India crash in June that killed more than 240 passengers, the airline's worst crisis, derailing its reputation, rebuild, and fleet modernization plans. Singapore Airlines has since reaffirmed that it's working closely with Tata Sons, providing what they called expertise and support to help Air India. And a bright flare lit up the sky over Sriharikota spaceport as India successfully launched its heaviest communication satellite, CMS-03, into orbit on Sunday. The satellite, weighing 4,410 kilograms, was carried by Indian Space Research Organization's launch vehicle Mark III in its 5th operational flight. CMS-03 is a multi-band communication satellite that will provide coverage across India and the surrounding oceanic regions. You're still seeing growth. And just looking at U.S. oil majors now reporting earnings, both Exxon and Chevron both remain committed to boosting production. Let's hear first from ExxonMobil CEO Darren Woods, as the company continues to ramp up production in Guyana and the Permian despite middling oil prices. Here's the Exxon CEO with more on that.
What we've seen here in the last several weeks and months, frankly, is just the uncertainty in the market, where the supply and demand balances are going to land with respect, and people taking bets as to what they think is going to happen going forward. Frankly, we don't spend a lot of time worrying about or trying to predict what short-term prices are going to do. We stay very focused on the long term. And frankly, if you look at the work we've been doing to drive our costs down and drive production down, our profitability on a barrel of oil has more than doubled since 2019 on a constant price basis. And from a break-even standpoint, our cost of production is very, very low. And so even today, at today's prices, we feel really good about the economics, the returns that we're generating, the plans that we lay out going forward in the future. The prices are very consistent with what we've seen here. And in fact, we're resilient much, much further down in the price deck. So we feel good about the returns that we're generating. I think if you compare other companies, they don't have the same, I think, break-even costs that we do, and so they may be more challenged in these environments, but we're still generating very, very strong returns.
What is your break-even cost?
All the projects that we're investing in have to generate a double-digit returns at $35 a barrel.
You've been pretty vocal in California, too. You're actually suing California ahead of the climate disclosure laws that are taking place. Is this all kind of the same theory that if you don't speak up, you're going to be in a position where it's either not profitable or you don't want to do business in these places anymore?
I think that's right. What you see happening, in fact, if you read the media in California, they now are very concerned about having a continued supply of affordable energy, particularly refined products that come out of refineries. Most of the refineries have closed and left California. And so we are trying to make sure that policymakers hear loud and clear the implications of some of the decisions that they're making. Frankly, what we see happening in California is very consistent with what we've seen happen in Europe, which is chasing a flawed ideology, translating that into legislation and regulations, and then ultimately driving businesses out of their jurisdiction. That's a recipe for disaster. And in this case, it's California taking an ideology, translating it into legislation and regulations, and then forcing companies like ExxonMobil to adopt that in their disclosures. And frankly, that's forced speech from our perspective, and we're trying to stand up against that.
Venezuela, very quickly. Obviously, we've been talking about the global implications of what's happening in Venezuela politically. You do business, you've got an exploration treaty in Trinidad and Tobago, and then obviously we know you're pretty well established in Guyana too. Are you concerned about what's happening in Venezuela right now? I'd been reading a little bit about how Venezuela is not happy with what you're doing in Trinidad, and they're trying to maybe stand up and push back on some of those things right now.
Well, I think, Venezuela has probably been unhappy with us for a while with the work that we've been doing in Guyana and the production that we've been bringing on. But as we've seen, frankly, the people of Guyana, the work that we've been doing in Guyana has been very, very successful. I think there's a broader global coalition that recognizes the need to keep markets open and free enterprise. And so I feel pretty confident that the U.S. and many of the European countries are standing up to any bullying that might come out of Venezuela to make sure that that Caribbean area remains free and that countries have the right to pursue their domestic resources and grow their economies independent of what Venezuela thinks they should be doing.
Well, let's get back to another pressing story with Air India, especially with the recent updates that 2 of their pilots were grounded due to certain issues and the lack of certifications. Mayur Patel is head of Asia-Pacific at OAG Aviation. He's going to be helping us at least today, delve deeper into some of the issues and the broader issues facing in Air India and the aviation industry in the subcontinent. Mayur, thank you so much for joining us. I want to start off with the grounding of those 2 pilots, and this comes on the back of a number of issues surrounding Air India. From July onwards, about 51 safety violations, a number of incidents also recorded on the regulator's website. I think it starts to raise concerns as to whether or not there are operational issues that perhaps are permitting some of these lapses from happening. What are your thoughts with regards to these latest issues with regards to the grounding of the pilots and what it says about Air India?
Thank you for that. So today we are seeing Air India as a larger and more complex post-merger that they've undertaken with Vistara and Air India Express and Air Asia Group. So I think through that consolidation, there's been a lot of complex issues that have arisen. They had a major disaster up in accident in June of this year, and there's a lot of complexity around geopolitics. So that's compounded to a lot of complexity that's currently in the value chain with supply shortages and all other factors that have gone into the making of complexity in Indian aviation today.
Mayur, I think I'd like to get some clarity on this because these are a lot of issues that are facing the aviation industry, from supply chain issues, geopolitical issues as well, pressuring Air India. But again, the question here, I think, is whether or not these operational issues could be solved within Air India before, regardless of the merger, because it seems that there are some lapses with regards to letting pilots that are certified flyer, making sure that those who are not make sure that they get the certifications that are needed. Again, does this point to perhaps some things that we have to be concerned about with how things are being done at India's national carrier?
I think if you look at the post-merger, Air India is going through a phased the Project Bihan, which is currently in its 4th year. They've completed 3 years in that cycle. So again, going back to the complexities, all these issues, they do pop up. And I think Air India is looking at safety through engineering, maintenance program with investments. They've called for 100 billion rupees over the weekend. There were reports of that. So there's a real need for cash injection when you're running a very complex operation such as Air India in a fast-growing market such as India.
So let's talk about that, Mayur, actually. The $1.1 billion in financing that's being at least requested from the likes of Tata & Sons and also Singapore Airlines. And again, this comes just a month, not even a year after the merger itself was completed. What they're specifying is that it's really meant to develop in-house engineering and maintenance departments and overhaul systems and services. I guess what has me a bit puzzled here is that shouldn't these things have been addressed before the merger was actually completed? Because it seems that these are sort of core to running an airline, at least from what I understand. Help us understand why, or at least help us understand why this is the case then.
Okay, so the large aircraft order that we've seen, they've got something like 570 aircraft on order. When you have such a large number of fleet that will be coming in over the next 10 years, you do require things like maintenance, safety, investments in that area. So I think Air India is actually putting a lot of investments when they called for this cash injection to actually see through the program, having in-house maintenance they can rely on made in India, having all the facilities in the airports that they operate within the India domestic markets, and having hangars that can actually fix the aircraft locally rather than outsourcing it to overseas maintenance providers. So I think these are incremental investments that they need to make as a result of the project, the transformation project they have undertaken. And part of that was to actually build a network through the investments through Tata and Sons and Singapore Airlines. And with that type of aircraft that's been inducted in over the 10 years, you will require a facility such as what they've announced with the plans for the investment that they'll be undertaking.
Right. Mayor, of course, there are still a lot of questions, perhaps some challenges that are facing Air India, but some might think that this actually provides an opportunity for some of the competitors like Indigo or Akasa, for instance, to carve out market share during their times of weakness at the moment. But is it really that easy in the Indian aviation market? Because on one hand, there is a question as to whether or not the capacity or the carrying capacity for the likes of Akasa Air or Indigo might be at a capacity where they don't have the room to take some of that market share, even if they wanted to.
Correct. So Indigo is operating from a position of strength. So it's become a bit more difficult for Air India Group to compete when your competition is getting stronger on the domestic run. And on the longer term time frame, you've got Indigo looking at long haul that will go as far as United States with their ultra long haul fleet of Airbus A350 products. So I think there's a lot of competitiveness that will be coming into the market, and also some of the Indian domestic players such as Akasa will continue to grow. Infrastructure is coming online. We'll be seeing Navi Mumbai that will be opening in December. Then we've got Delhi's second airport and all the other airports that are working on the PPP model. So we'll see a lot of new infrastructure that will be growing over the next decade or so. And again, that creates a lot of competition for Air India because the current incumbents are quite strong and they'll get stronger along the way. And I think you can just look at the fleet, aircraft fleet order that Indigo's got. So it's ranging up to about 1,300 aircraft they'll be inducting over the next 10 years plus. So you can see that they'll go strength to strength. Air India's order books are looking quite healthy as well. That's about 570 aircraft. That's a mixture between full service carrier as well as low cost. So they'll be competing in the dual brand strategy, whereas Indigo is moving towards more of a hybrid, where they'll have to offer a full service product in addition to their low cost model within the Indian domestic market. And we've seen both airlines grow their regional presence recently with Central Asia growth and Southeast Asia. So I think all that capacity will come in, and they've got to deploy some of these aircraft on new city pairs that we'll be seeing further on as we move forward in the next decade or so. But again, that provides opportunities for Air India to sort of position itself through its cash injection. Singapore Airlines has actually made some commitment to actually helping them with their service standards as well as safety. So I think there's some positive signs for Air India moving forward as a result of this capital injection that they're seeking of approximately $1.1 billion US. So quite a significant amount. And I think they're quite serious in making sure that they turn this airline down. They've seen some unforeseen crises that have emerged. It's not in their making, some of them, such as geopolitics, that's eaten into some of their cash reserve because of longer detours that they have to make. Reaccommodation, crew issues arising from those detours where they've got to extend some of the stopovers and reaccommodate the cabin crew and flight deck crew. So again, challenges that are not in their making, but it's something that they'll be addressing through smarter ways of working through their transformation program.
And Mayor, can you talk to us about the growth outlook now for the Indian aviation market and some of the perhaps the main constraint right now facing this growth? If you can just do it quickly in just a minute, sir.
So, great opportunity. India's going through a transformation in its market itself. Large middle-class population. There's propensity for them to travel. And that's reflected in the order books that Air India, Indigo, and Akasa have made. And I think that creates a lot of opportunities for the market itself. And I think they're primed to actually reap that as we move forward.
All right, Mayur Patel from OAG Aviation, thank you so much for taking some time out of your schedule to talk to us about the latest with regards to Indian aviation market and the latest with regards to Air India. Always appreciate your time, sir. And Sunday was iconic for India in many ways. The country has won the Women's ICC Cricket World Cup for the first time, defeating South Africa's women by 52 runs. Deepti Sharma and Shafali Verma delivered standout performances for India. It was the first time neither Australia, England or New Zealand made it to the final of the tournament, signaling the emergence of a global powerhouse of women's cricket. The Indian Cricket Board has announced a $5.7 million cash award for the women, in addition to the $4.5 million in tournament earnings. Despite being hosts, India were never the favorites, but became so after pulling off an upset against Australia in the semi-finals. No wonder Captain Harmanpreet Kaur told the press after the victory, "I am numb and I am not able to understand."
We felt we could win from the first ball itself. Because the way our team was playing in the last 3 games, a lot of things changed for us, especially our self-belief. We have played good cricket for a long time. We knew what we could do as a team. So from the first ball itself, I had the belief that it doesn't matter.
And some very interesting conversations coming up right after this short break. We'll head to Adipec 2025 in Abu Dhabi and speak to the CEO of Baker Hughes in a first on CNBC conversation. Also lined up later in the program, a chat with the CEO of Binance, Richard Teng. Don't miss it and don't go away. You're still with Inside India. We are counting down to the market open in India, and this is the final snapshot of how from Gift Nifty futures to show how we might be shaping up before that opening bell. And right now, it is still foreshadowing meager gains of about 125 points above Friday's close. Mind you, the Nifty 50, as we mentioned, coming off a two-day losing streak. But no matter, it is up about 4.5% over the month of October. And at one point threatened 26,000 points, or breached 26,000 points. And that sets up the November challenge to try to make a fresh assault at that level. The Indian rupee, though, a little bit softer today, but not by much, 88.77 against the U.S. dollar. Now, a quick check on where oil is right now, which is higher in Asian trade after recording a third straight monthly loss in October. We take a look at WTI and Brent crude. They're both wearing matching shades of green, up by about 0.3% apiece, with WTI now at $61.16 per barrel. Brent crude almost at $65 a barrel so far today. OPEC and its allies have now agreed to continue hiking production by another 137,000 barrels per day from December, as widely expected, and the same increase as the previous two meetings. But it plans to pause those hikes in this first quarter amid a supply glut. OPEC Plus has restored almost 3 million barrels of daily supply since the month of April. And those oil moves come as global energy majors will share the stage with tech majors at the annual Adipec conference in Abu Dhabi. Our very own Dan Murphy is on the ground and joins us live now. Dan, I understand you have someone very special to help us kick off Adipec right now. Take it away.
That's exactly right, JP. Good morning to you and welcome to Adipec 2025, where the conversation on the ground here is firmly on the nexus between energy and AI. It's something that we're going to be discussing over the coming days, but let's dive straight into our first guest. I'm very, very pleased to say that Lorenzo Simonelli is here. He is, of course, the CEO of Baker Hughes. It is a company right at the forefront of that nexus. So let's jump in. Lorenzo, good morning. Welcome to the program, sir. Good to see you.
Dan, great to be with you again.
Lorenzo, you and I were talking just off air before about how the conversation at Adipec has really changed. We've gone from talking about COVID and Biden-era policy straight into, of course, Europe's energy crisis, Trump sanctions as well. And now the focus is on artificial intelligence and meeting the energy demand need of the future. Just walk me through how that conversation has changed and where Baker Hughes ultimately fits in.
Definitely, Dan, and I think it's been really a great evolution. And as we come here today at Adipec, it's really about energy, intelligence, and impact. And we've had discussions also during the last several days on the expansion of demand that's going to come from data centers. And at Baker Hughes, we really see this as the energy equation. And it's the intersection of the industrial world and the energy world. When we look at data centers, we look at the consumption that is growing from a perspective of turning data into knowledge. There's a need for energy, and that energy equation is vital. And at Baker Hughes, we provide the value chain with the portfolio of the capabilities to move the molecule and provide that energy. And we're at the intersection of really what we see as a key theme that's going to carry forward.
So what are you seeing in the market right now and what are you hearing? Because I really get the sense that perhaps we're underestimating that demand requirement right now globally.
I think we are, and I think we'll see as we go forward, it's not just about North America, Western Europe. There is a need for energy and a need for knowledge globally. And when we look at data centers also here in the Middle East, when we look at Southeast Asia, knowledge is going to be consumed by where the population is increasing and where those centers of gravity are. And so there's going to be an exponential growth and need as we look at not just the developed world, but also the developing world. And we see that as a great opportunity for Baker Hughes. And as we've listened to our customers over the last few days, there's a growing aspect of opportunities here in the Middle East, Southeast Asia, Latin America as we go forward.
So walk me through what those opportunities are specifically as well, and where Baker Hughes can actually apply some of these solutions as we see this conversation around energy and AI continuing to evolve. Specifically, what would you say is the real opportunity when it comes to applying AI to things like heavy industry, for example, or even just energy systems broadly?
I think it starts, first of all, with natural gas and the abundance of natural gas and being able to take that natural gas that is available and also expanding it from a network perspective with the infrastructure, the pipelines, the liquefaction, and LNG we think is going to continue to grow and be a big aspect. Then that powers the data centers. When you think about taking it into simple terms, you can think of, we are powering the aspect of the semiconductor chips through the natural gas that then allows the knowledge to be there. And we see these data centers then being able to provide efficiencies in our factories. We're simplifying the way we do work. We're making it more value added. We're able to make faster decisions and apply things quicker. Also in operations, the way in which we engineer, we make requisitions. We're applying AI, and then we're applying it in the field as well with regards to maintenance, being able to reduce downtime, the way in which we're able to expedite field service decisions being made. So it's a huge opportunity as we go forward.
A couple of challenges when it comes to the AI conversation though, and its impact on key energy players. Two things that I'm hearing about is, number one, data security continues to be an issue, and number two, access to talent as well, also a key concern. Is that something that you're struggling with at Baker Hughes right now?
It's definitely themes that we look at. And from a security perspective, we've got to stay current with all of the security measures. We obviously, like many companies, are very much at the forefront of cybersecurity and working with the various authorities as well as the various different groups to make sure that we're taking the right precautions. But it's something that's real and it's going to be out there and something that we've got to be vigilant for. With regards to training, it's really an aspect of getting the right talent, and that's something that we're doing from an upskilling perspective. We're working with our teams and giving them the opportunity to learn how AI can be beneficial to their daily jobs. Not to be in fear of it, but actually to encourage its usage so that then it becomes a change management aspect. Because this isn't about reducing the aspect of employees, it's about reskilling employees and also making their lives and also the work they do better.
I know Dr. Sultan Al-Jaber was speaking at the ENACT forum yesterday. You were, of course, part of that conversation as well. Really interesting line here. He said, you can't run tomorrow's economy on yesterday's grid. So I think that's where the conversation is today. And as we see AI continuing to disrupt these energy companies internally, but also the broader system, talk to me about the conversation around investability as well, because I think this is also a key issue. Can the industry really pivot when we have oil at $60 a barrel?
I think, again, when you look at the longer term, there's going to be an all-of-the-above strategy relative to the energy mix that's provided. And it's going to be an aspect of oil, it's going to be an aspect of gas. And so I wouldn't frame it directly correlated just to the oil price. Also, when you think about the grid and the infrastructure, what you are seeing is a move towards distributed power generation. And we think that's a theme that's going to be very much thought of in the short term as then the larger infrastructure comes into place. So what we're seeing is actually the investments are there. You've got the major players, the hyperscalers that are willing to make the investments. And also from a capital markets perspective, the infrastructure funds are willing to make the investments as well.
Broadly across your industry, do you think that energy companies are being valued with an innovation premium right now, or is the industry still directly correlated to the ultimate outlook on the price of oil?
I think we're still very much correlated to the outlook of oil, which I think is disappointing. I think the industry as a whole has a tremendous amount of innovation. And when I look at what we fundamentally do from an industry perspective, we provide energy. And if there's something that's been the biggest beneficiary of taking from poverty to prosperity, it's the availability of energy. And that's what we as companies do. We provide those kilowatts, we provide those molecules being converted. And that's where Baker Hughes fits in from the energy equation, being able to marry the interconnectivity through the technology, the services, the equipment that we provide.
I think it's interesting because I've also been told in the last couple of weeks that, one thing we should be talking about is the fact that fossil fuel companies aren't necessarily being valued as key drivers of this energy AI equation and perhaps, still directly correlated to the price of oil. So with that in mind, Lorenzo, of course, we're now in Q4. It's been a really busy year for you. I know you've got a super busy year ahead as well. With oil holding it around this 60 USD handle, walk me through the business outlook for 2026. What should we be looking out for?
I think, as we've stated during our last earnings call, again, we're going to see a tempered marketplace in 2026. We think over the first half, it's going to be subdued. Again, you've got extra barrels coming on. those are going to be consumed. The demand is there, but it needs to continue to go through the system. And as we enter into the back half, we should start to see some pickup. That's on the oil side. As you look at gas, as you look at the momentum from a macro perspective and internationally in particular, we see a continued theme of growth from an aspect of data centers, from the aspect of the industrial growth that's taking place. And that bodes very well for Baker Hughes as we go forward as well.
Really interesting to watch, Lorenzo. And you know what? If you had have told me that 6 years ago when we were sitting here that the conversation at Adipec on the ground would be about AI, I wouldn't believe you, I think. So it's interesting to see how the conversation has changed.
We'll see where we are in 6 years.
Exactly. All right, Lorenzo, really appreciate the conversation. Thanks for coming on today.
Thank you very much.
That is Lorenzo Simonelli there of Baker Hughes. JP, we're going to have more interviews, more news, more views coming from Adipec through the course of the day, so do stay with us. JP?
And we will be staying with you, definitely, Dan, because if there are more fascinating conversations similar to what you had with Lorenzo Simonelli, definitely something worth watching on this show. Well, we're counting down to the market open in Mumbai, and we'll be back in 2 minutes with some movers and that conversation with the CEO of Binance. Don't go away. We're about a minute and change before the Indian markets come online for the start of the first trading day in November. And an exciting setup for Indian markets. On one hand, you do have about 400 or over 400 companies set to release their earnings. Actually, it's going to be a busy weekend in terms of report cards from India's biggest corporations. We also have the fact that the Indian Nifty is up by about 4.5% in the month of October. And during that time, made a brief breach, that is, of that 26,000 level. We'll see if they can actually continue that later on. There's a lot of optimism that might be set up actually for the Nifty 50 when it trades in about 45 seconds. Of course, the ever-present question with regards to the Indian rupee remains 88.75 is where the local currency sits against the U.S. dollar. Of course, it has come off of multiple times where it tested fresh record lows actually against the greenback on top of that softness. But so far, it hasn't really played a part in dampening the mood with regards to markets and stocks out in India that started to find its footing at this throughout the start of the fourth quarter. And again, the Nifty 50, as we mentioned, 25,696 is where the Mumbai benchmark now sits. And we're about 10 seconds away from finding out whether or not GIFT Nifty futures did indeed foreshadow an accurate 100-point gain to start off the month of November. And just like that, we are seeing that the Nifty 50 so far in today's session, well, it is opening just a little bit sluggishly at 25,729, but now it is perhaps just starting to find a little bit of room to rise now as traders begin to take in their first cup of coffee and start to action on the start of their November. It's looking flat to the upside for the most part, with the Nifty 50 just trading a bit up seconds into the trading day. And a quick check of shares of Maruti Suzuki so far today. We take a look at the shares of Maruti Suzuki, which are down by about 1.9 to 2% in the first minute of trade today. The car maker posting a 7% on-year rise in net profits for the quarter ending in September. But that still missed analyst expectations. The company, though, has still hit its highest even export volume in a single quarter, with a rise of 42% on year. Domestic wholesale, however, declined in the quarter as consumers opted to defer buying until the GST-led price reduction kicked in from September 22. Maruti also says it expects small car sales to outpace SUVs post the GST cuts. That could help revive some of the sluggish demand we've seen in that segment. A quick check now of cryptocurrencies, and just looking at the board of some of the major cryptos at the moment. While we're waiting for that board to load right now, we are seeing that it is a bit of a down day, that is at the start of November for most of the major cryptos. Take a look at Bitcoin, now down by about 1.9%, but not as bad as we're seeing with Ether, down by about 3.5%. In fact, this makes an interesting backdrop actually for our next guest, brought to you by Elaine Yu, who is on the ground at the Hong Kong FinTech Week. As you mentioned, some very interesting lines coming from around there, around blockchain and digital money. Elaine, what do you have for us at the start of this very important summit?
Hey, JP. So we're here at Hong Kong FinTech Week, and this year the theme really has been crypto growing more mainstream as more institutional players like banks, traditional players come into the space and going into things like tokenization. And we've just heard the bank CEO sounding a very bullish note on this technology, with the HSBC CEO at FinTech Week just now saying the bank's tokenized gold product saw mass adoption by retail investors in Hong Kong, and they're now the third largest product globally. And off the back of that, the Standard Chartered CEO also said that its Hong Kong leadership and bank leadership believe that all transactions will be settled on the blockchain eventually, and all money will be digital. And now joining me is Richard Tang, the CEO of Binance. Thank you so much for joining us today. How are you doing?
Thanks for having me. It's great to be here in Hong Kong.
Yeah, so I wanted to ask you about some crypto movements lately. You know, there's been a lot of eyes on where Bitcoin is going. So I want to start by asking, I mean, there are so many factors that influence, crypto movements itself. It has been, Bitcoin itself has been kind of stubbornly below 110K US dollars, but there has been a surge. Some analysts and experts have pointed out on Binance's Bitcoin spot orders, the US dollar denominated ones, suggesting that there's a lot of whale activity coming in. So are you indeed seeing more whale activity on Binance, and what is driving that?
Well, first of all, it's very difficult to comment on market prices because they are subject to different factors, as you mentioned, right? But if you look at the long-term trend, as you mentioned, for the longest time, crypto was a very retail play, niche asset class, right? Specialty asset class. Now it has gone mainstream. In 2024, 2025, we see record numbers of institutions, corporates onboarding onto our platform to start trading, doing asset allocation into crypto. So if you look at the long-term trend of it, the momentum is still very strong, it's still very bullish, there's a lot of support. And we're seeing support from different sectors, right? So from the institutions, from the traders, from the asset allocators, the family office, and even sovereigns setting up their own crypto allocation in this space. So to me, the long-term trend is very bullish. We are still at a very early stage, probably 7.5% crypto adoption globally. So going forward, I still envisage quite a lot of demand coming through on that front.
I want to talk about Asia, specifically India, since we are live on the Inside India show. And Binance and others have reportedly sought more clarity from Indian regulators about its Web3 policy. So what do you think with India, such a large market, but also with some market barriers there perhaps? What is the potential and challenges regarding this specific market?
Well, India is a very important market. As you mentioned, the largest demographics in the world. very tech-savvy, very young population. And in every of these countries with very tech-savvy population and very young demographics, crypto adoption tends to be the fastest compared to others. So if you look at Chainalysis crypto adoption index globally, India ranks up there, right? Because of all those factors coming into play. And with the government and the regulators giving more clarity, it can only boost India's standing in the crypto scene. So we're very bullish. We're working with the government there to see how we can support the government's agenda.
And how do you think India's regulators can facilitate that? What are you hoping to see from those officials?
Well, to me, I work with many regulators around the world, so we are the most regulated exchange with 22 different jurisdictions that we're licensed in. But with the way we see crypto adoption is this, right? If the regulator can give a lot of clarity and come up with smart regulation to support the likes of like stable coins, the utility, the crypto trading, crypto asset management, custody, the better it is for the industry and the greater the crypto adoption that we'll see, right? So anytime you see a smart crypto regulations, if you take US for instance, right, it went from very anti-crypto under President Biden's administration to now President Trump being a huge supporter and a spillover effect throughout the world in terms of crypto adoption. And coming out with things like Genius Act, Market Clarity Structure Bill, those give US a huge benefit on that front. And you see all the big banks now jumping onto the stablecoin bandwagon in the US, different people trying to do tokenization. We have a arrangement with Franklin Templeton in the US to help them on that front. So you see all this adoption taking place very quickly with clear regulation. So clear regulation has a way to bring about adoption very quickly.
Yeah, and on the note of Trump, President Trump recently pardoned Binance founder ZZ. How do you think that will influence his role or his influence over the exchange? And is he still the 90% majority shareholder in the exchange?
Well, ZZ is the major shareholder of Binance, as all of you know. Yeah. So as with all shareholders, he has shareholders' rights at every point in time. So I always tell people that I serve at the pleasure of the board of directors, whom I report to, as well as the major shareholders of the company, similar to any other professional CEOs of big companies, right? So we continue to focus on building Binance to be the best-in-class platform to serve our close to 300 million users worldwide, and the pace of growth is very, very strong. But we are very thankful. It's fantastic news coming out for the pardon for CZ. We're very thankful to President Trump, the entire Binance family, as well as the crypto industry are very thankful because people know CZ's contribution to Binance as well as to the crypto industry at large, right? So it's very positive news. We're also very thankful to President Trump for flying the flag to say US will be the global crypto capital of the world. And that's very significant. So we are looking at how us being the largest crypto ecosystem can really support that ambition.
Yeah, and staying on that topic as well, there are reports saying that Binance, as the world's largest exchange, did help boost the credibility of the Trump family's token, the World Liberty stable coin, lifting up its market capitalization by listing it. And that has drawn some criticism from politicians about, Binance facilitating Trump's crypto deal. So how would you respond to those allegations?
Let me clear up a lot of falsehood on that front. First of all, the usage of USD1 in terms of the transaction between MGX as a strategic investor into Binance, that was decided by MGX. MGX has come out very straightforwardly to say that's the case. We didn't partake in that decision. USD1 was listed on other exchanges before it was listed on Binance, right? So a lot of these reports just miscategorized. They are totally false on that front. And thirdly, Binance is the largest crypto ecosystem in the world. So at any point in time, promising projects, would want to have conversation with us. And we have conversation with many different parties. Sometimes it works out, sometimes it doesn't. In the case of USD1, I'm glad that both parties work it out. So, we are very supportive of crypto innovation, including on the stablecoin front. We work with many different parties around the world, payment, utility, whatever they're going to support the crypto use case and innovation agenda. We are very supportive of that.
Right, and we just have about a minute left, so I just wanted to ask you about Binance's. A couple weeks back, there was these crypto sell-off that triggered record liquidations, and Binance experienced a systems shutdown. So there are a lot of different theories about what triggered the sell-off in the first place. Is it really Trump's tariffs, and how can Binance sort of prevent, or make sure that it can withstand events like that in the future?
Correction, there's no shutdown. Right? We operate 24/7. There's no slowness in terms of trading. Things happen as normal. So firstly on that, there was some asset transfer slowness that happens for half an hour. And there was a price deviation on indices of USDE, BNSO, and WBH, right? So on those two specific incidents on Binance, we took accountability and compensated our users in excess of more than 300 million. On top of that, the liquidation was a market event. It cuts throughout not only crypto but equities. US equities lost 1.5 trillion that day. US equities saw 150 billion of liquidation. Crypto was much smaller, about 20 billion, right? So it happens across all the exchanges, major exchanges, centralized or decentralized. And the bulk of the liquidation happens within a 45 minutes window, right? So I want to correct that myth. But over and above of what we came out to compensate users, we went above what other exchanges has done. So we came out with another 300 million as a goodwill payment. We want to share the pain together with our users. Other exchanges have not done that. So we're very proud of what we are doing on that front.
Okay, important conversation with the CEO of Binance, Richard Tang. Thank you for joining us. And for now, it's back to you, JP.
Thank you so much, Elaine. And that is all the time we have today on Inside India. But do keep watching CNBC because Access Middle East is coming up next. Have a good morning.